Remember how the markets had gone topsy-turvy on the final days of elections? A massive upswing after the exit polls and then a plunge when the results were announced. And not just any plunge, the biggest in 4 years. Now, market investors were obviously quick to react. Hundreds of mutual fund investors rushed to buy units and book profits. But were they able to take advantage of the dip? No. You see, a technical glitch pushed the transactions to the next day. The next day when the market started recovering. And so, the investors could make only a fraction of the money that they would have had the orders gone ahead on the previous day. So, they could not take advantage of the dip. Now, such glitches aren't uncommon, although they aren't very frequent either. But each such glitch could lead to losses worth hundreds of crores for investors. What if your screen freezes while trying to book profits when the market is taking a sharp move? Or you can't see your order book or positions in your Demat account? Or even worse, the app itself is not loading. And these issues crop up across the market, whether it's a discount or a full-scale broker. And not just equity, it has happened with commodity traders at MCX2, which suffered a major outage as long as 4 hours in February this year. So what causes these glitches and how problematic are they? What are the solutions? Is it peculiar to Dalal Street or a globally recurrent phenomenon? Has a regulator taken notice, and what is it doing? All this and more in today's episode. It's Wednesday, the 26th of June. From the Economic Times, I'm your host Anirban Chaudhary. This is the Morning Brief. First, I spoke to my colleague and ET's markets ace, Nikhil Agarwal. So, Nikhil, explain to me, how does a glitch impact trading?
See, just like you're traveling by train and your safety can be compromised by a train accident over which you have absolutely no control, similarly, whenever you are investing or trading, you can be hit by a technical glitch anytime. Every month we hear traders ranting on social media about one of their trading apps not loading, showing login errors, the response time is slow, there's a delay in order books not getting updated, or orders are not getting executed, etc., etc.
And Nikhil, is it possible to sort of quantify the impact of losses to investors in such events?
Right, so there is no such publicly available data as to how many traders get affected as a result of such glitches because it happens broker-wise. But going purely by social media trends, it appears that the number of glitches has increased as more and more people are opening Demat accounts, and the trading volumes have also gone up substantially in the last few years. But I spoke to one of the IT services providers for brokers, and this guy told me that in most cases, glitches are happening because there has been a tinkering with the software, or it may be due to a networking issue.
So also, this is clearly not a problem with just the exchanges, right? In the sense, for example, in January, customers of Grow, which is India's biggest stockbroking platform, faced a similar glitch. Of course, it was rectified, but they must have faced some losses as well. So what do you say to that? How do you see that?
See, all these accidents are something that can hit traders very hard, turning profits into losses. And particularly for option traders, a delay of even a fraction of a second can put their money at risk if they are unable to unwind their open positions in time. See, we have heard some very scary stories of traders losing a bulk of their capital just due to a glitch. Brokers had reported nearly 150 cases in the last financial year. And every other week, we hear that one of the brokers' systems are down. Now, even this is not an Indian problem. Even the New York Stock Exchange reported a glitch this month, after which Berkshire Hathaway shares flashed 99% drop, but that was eventually corrected later on.
Nikhil spoke to Shivakumar Jayachandran, a veteran trader who now runs OI Pulse. He asked him how big is this problem of tech glitches?
Nikhil, it's not only about the technical glitches. Probably the markets have started to, like a lot of traders, new traders started coming in, and with the daily expiry coming into the picture. Earlier, when the expiries were happening once in a week, this was not highlighted much. With the daily expiries happening at least every other day, what the traders started doing it, they have started to focus on a particular index on those days. And when they see that a particular moment, if they are not able to enter or close their positions which they have, then yes, it is becoming a big problem. And probably one reason it might be, I think the broker infrastructure needed to be upgraded. I think none of these guys would have planned for such kind of a volume and volatility that is going to be prevailing, or and it is going to be adding on in the near future as well. It has shaken the confidence of a lot of traders. And imagine, you might have the best day, but if your broker terminal doesn't support you, you would definitely end up losing whatever the money which you have made. And especially when you know that there is going to be a huge volatility and you wanted to play big and you take positions big, and unfortunately, due to some or the other reasons, which is not part of your business, wherein you are not able to close it, then it becomes a big, big nightmare for all the traders. Yes, a lot of people have sent me screenshots, Shiva, in today I should have made a profit of 10 lakhs. But unfortunately, by the time my broker terminal got up, I was not able to close my position and I was sitting in a loss of 10, 15 lakhs. Yes, several people have escalated this to the brokers. And I'm not sure whether every broker has refunded or they have compensated the loss. That is a big gray area which has been happening, Nikhil.
Can you also give us some examples of many of your students who may have lost some money purely because of a glitch?
I wouldn't say it is purely because of the glitch alone. An incident happened with one guy who was entering into in close to 2 lakh quantity at around 245. By the time he was able to close the position, his profit was right in front of his eyes. The broker terminal was showing him a profit of close to 15 to 18 lakhs because the volatility was too high at that particular period when he was taking the hero or zero call. By the time he was closing the positions, the broker terminal was not allowing to take so much of orders. It is close to 2 lakh quantity. And the exchange permissible limits, and they needed to only shoot only 8 or 9 orders per second. In that scenario, even that was not happening with him. Instead of having a 15 lakh profit, he closed the day with 18 lakh loss on that particular day. So he felt really, really bad because he knows I could have easily closed the position. Unfortunately, due to someone else's fault, I was not able to close my positions on time and I have to incur a loss. It took several minutes for him to close the position, which should have happened in fraction of a second.
That was a very scary incident which you just spoke about. So, for example, if you placed a sell order and it doesn't get executed on time purely due to a glitch at the broker's end and not at your service provider's end, don't you think that there should be a rule mandating that the broker should compensate the trader for the loss?
The problem is, I think most of the brokers are totally insulated from whatever the things, because anything which is technical, they are not bound to pay any kind of a penalty to the users. So that is something which is stopping all the people to approach the brokers to get the compensation and other things. And moreover, how will you prove that I was sitting on a 13 lakh profit and it became an 18 lakh loss? It's very difficult. And let me tell you, once you have this kind of a bad day, it's very difficult for a trader to come back, to gain the confidence, to trade with such kind of volumes again. That is going to be having a big dent, not only for the current, the future as well.
So what is the best way forward as a trader to deal with this issue?
Only thing is the broker needed to step up their game in terms of the infrastructure. And maybe they should also speak to the exchanges in terms of allowing more orders to be getting placed. Because as a retail community, they have a lot of challenges. Unlike the prop desk or unlike the HNIs, these guys doesn't have access directly to the colo. So these guys are already delayed by 1 or 2 seconds by the time they place the orders. Whatever the rates which we see, it would have already been traded. So one suggestion from my end would be probably for the high volume traders. I know I can understand the low volume traders who would not be placing the orders through the day. But if there are some high volume traders or high network traders who are individuals who wanted to trade on large volumes, probably the brokers needed to set up a separate servers which will be catering to these people, which needed to be connected to the colo, which might help these guys in a large extent. So someone in the prop desk is having that kind of an access. Why not a retail trader who doesn't have the access to the colo? That is my big question.
To answer this and some more questions primarily on the complexities of the system, Nikhil spoke to NSE's former CTO, Shankarsan Banerjee. He asked him, why is the system so vulnerable to these glitches?
See, the system is actually quite a complex system. And in India, it is a little more complex, partly because we have some very specific investor protections. And that makes things a little more complex. So globally, for instance, there is a single depository. You don't have a separate account in a depository and a separate account in the exchange. And here we have two settlement systems. We have two depositories. We have two exchanges. So it's a little more of a complex setup. So there are challenges in the whole system of all these different parties working together in perfect unison. And sometimes that doesn't work. Sometimes there are glitches on that. Either there is a connectivity issue or there is a bug in the software because it's complex software, or there is a regulatory change that is misinterpreted. The number of participants have gone up. So even though the percentages have gone down quite dramatically, let's say a few million trades, 1% would be much less. Today you have 10 to 12 billion trades, orders. So the number of orders that get affected every time there's a small glitch, 1% would be unimaginably high.
So the number of demat accounts, as you said, has also increased from, like 4 times since March 2020. And at the same time, volumes have also gone up multifold and high frequency trading has also increased. Is that imposing pressure on our IT infrastructure and market intermediaries like brokers, clearinghouses, and exchanges are not spending enough, do you think, to minimize such incidents?
No, I think they're spending enough. Like NSE and BSE and all are they have huge budgets. They don't have money constraints. The bigger challenge is, one, the volumes have gone up, the complexity has gone up. Second is the time periods have become much shorter. Everything has become much more automated. So if you put your money in it before 3 o'clock, you expect that day's NAV, which was never the case. 10 years ago, you would get T+1 NAV regardless of when you put your money in. Banks don't submit their data in time. The money transfer doesn't happen in time. The RTGS system may have a temporary glitch. Internet issues may crop up. All kinds of things can go wrong. So, if you had 2 hours to do it, you have much better to fix. If you have a few minutes to do it, you have it's much harder to fix it. It's true of all the participants. Banks face some of the issue. Exchanges face some of the issue. Clearinghouses face some of the issue. Different issues, different stresses. Exchanges have only now 15 minutes to do end of day. So anything goes wrong, there will be challenges with opening the market.
Trading at Commodity Exchange MCX was also affected in February this year for 4 hours after they changed their software vendor. So do you think it is best for all exchanges and even brokers to have their entire IT infrastructure in-house?
So firstly, it's quite infeasible. You can't possibly hire all the skills required to do it. It's not a question of money or thing. Everybody would love to have it in-house, but you won't have the scale, you won't have the skills. After you implemented it, what will you do? So FT essentially was there in-house, but FT also sold to the outside world. So the MCX moved from financial technologies to TCS, partly because of the challenges of financial technologies themselves. And obviously FT was promoted by the same people that ran MCX. And it was for a while fairly close. But even then there are challenges. The main challenge is skills. How do you get the people to develop stuff in-house and retain them? For 25 years, you have to retain that stuff, whatever, those skills. And therefore, every exchange outsources quite a bit, everywhere in the world, not just in India. And TCS is a big player anywhere in the world. TCS is big, Cognizant is big. Quite a few players are there who are NASDAQ themselves have bought them. They've bought into an IT arm. They bought the vendor that used to supply to them. The same thing London Stock Exchange did. And you could do that. But again, you can't restrict it to your own activities because then the purchase cost or the acquisition cost doesn't justify it.
But at the end of the day, whether the problem is at the broker's end or at the end of the service provider or at the end of the exchange, at the end of the day, it is the traders who suffer.
So there are two kinds of traders who are more exposed to risk. If you're a slow trader, if you're like somebody who buys and keeps, for instance, I rarely ever do day trades. I never do day trades. I'll buy it and stick with it for 6 months, 1 year, 2-3 years, that kind of thing. So for me, a day's glitch doesn't make too much of a difference. I don't actually lose money, right? All I lose is opportunity. If you are so reliant on not having a glitch, then you're actually taking a big risk, because minor glitches will happen. So it'll happen.
So that's a very interesting point that you said. Part of the risk for a trader is technology.
So if you take serious option traders, they put all these risks into account, that they are, how quickly can they place orders, and also how quickly can they close out positions, how quickly can they cancel runaway trades, things like that. They put it into that. Now, people who are less experienced, they don't do all this, and therefore they are more exposed. And NSE and BSE also, they inspect algorithms and trading software, right? So they have also become much better at it. So the issues have become less.
Now, let's talk about solutions. I asked Nikhil, has the capital markets regulator taken notice of these issues, and what is it doing?
Yeah, Anirban, so SEBI has a framework in place to deal with any kind of malfunctioning of the system, under which brokers have to inform stock exchanges about any glitch within an hour or so. They also have to submit a root cause analysis report. Now, recently, upon SEBI's instructions, exchanges have also started a new portal which is called Investor Risk Reduction Access Portal. So it comes both on a website as well as in an app format. So one can go to this platform to square off or close open positions and cancel pending orders in case you fail to do it via your broker. So there are basically the three things that a trader can do using this platform. The first is that you can view and cancel your pending orders from the order book. The second is you can view your net position screen. And the third is you can close or square off your existing positions. But you cannot create a fresh order.
And finally, we asked Jayachandran what solutions the broking community can work on.
Probably one thing which they can do, one is to create some corpus or a fund which will be catering to the losses of the traders who are not able to close the positions due to glitches by the brokers or from the exchanges. Second, there was a proposal, I'm not sure and how many of them are still using it. There was a portal which was supposed to be there for all the traders. When they are not able to close the positions in the broker's terminal, they should be able to close it on the exchanges directly. Or one more thing which can be done, bring a common platform wherein you can have several brokers, bring a common platform where each of these guys will be able to connect and then take trades. At the end of the day, anything to help the retail community, because unlike in the past, retail community have taken a large interest, not only in the options, even in the equity space as well. And if we are not going to be supporting them with the right infrastructure, then definitely it is going to be an industry which will get eventually killed in due time. And last but not the least, SEBI should pitch in with a timeline wherein all these brokers who are not adhering to the FA in terms of the infrastructure, probably they should be doing a periodic audit to say, for example, I would have been equipped to take only 1 lakh clients. But with the kind of volume all these brokers are adding to them, it definitely needed some surveillance wherein the exchanges or the SEBI should step in and say, if you guys are taking so much of broking accounts, whether you have the infrastructure to handle that much of a volume. If they do not, they needed to set in benchmark. This is what we wanted it. If you guys wanted from 1 lakh to 2 lakh clients, you needed to have so many things, parameters fulfilled before you can add new clients. Similar to the way how RBI is penalizing the banks. In case if they are not adhering to certain norms, RBI in stopping the you cannot take on new customers and so on. Similar kind of measures needed to be taken even in the broking industry.
That's it for today. You were listening to this episode on The Morning Brief. It was produced by Vinayak Agarwal and Surohini Jain, sound designed by Indranil Bhattacharjee. We hope you liked the episode. Please share and subscribe if you did. The Morning Brief drops every Tuesday to Friday on a listening platform of your choice. Keep listening and have a good rest of the week.